All right, people, we should be live. If you can just give me a quick confirmation in the chat that you can hear me okay and you can see my screen. All right, volume is good, yeah? All right, fantastic. How is everybody? Good to be back for a July stream. The last one I did was back in June. I generally now try to do these once a month. I know I used to stream quite frequently in the past, but as many of you know, I've been running the charity mentorship and in the process been moving house, traveling, spending time with family, but trading as well. But it's good to see some of the regulars here. Special thank you to you all for tuning in. And as always, in today's stream, anything said is not financial advice. It's just my view of the market. It's generally more for educational purposes. And something that I always try to do on these streams is not really, talk about essentially, do I think Bitcoin is going to go to 150 or 200K? I absolutely do think it will do that, at some point in the future. My streams have always been geared towards those who are learning to trade and want to embark upon that journey of becoming a trader. And as I said in the past, I always try to give back something of the nature that I wish I had when I first started, without really going into the intricacies of order flow, footprints, market profile, just really looking at markets from a price action first perspective, and then we can talk about the other tools at a later point in time. But a special thank you to my partners, Prime XPT, for once again sponsoring the live streams. Don't forget, with Prime, there's a special promotion going off, which is you can now trade on their platform throughout July and August for significantly reduced fees. Okay, so most crypto exchanges, I believe, charge anywhere between 0.05 to 0.04% in terms of maker-taker fees. With Prime, you're looking to pay around about 0.015%. You get access to VIP2. There's no certain volume required. I know with with many exchanges, you have to hit certain volume thresholds to get to these lower rates. I think for Prime, they're certainly just promoting this to allow you to trade digital currencies. I also believe Forex market, CFDs, and whatnot. Okay, I think for those of you who are, when you look at trading, I just want to touch upon this. I didn't know this until recently, having spoken to the Prime team. But for those of you who are looking to trade CFDs on Prime, you can get swap-free accounts. I will have further details about that because that's fairly substantial, especially those of you who, want to trade CFDs, but you're always worried about the interest rate nature of trading. So it's certainly going to be more appealing to those, for whatever religious reasons different people have. All right, so let's just kick off the stream then. I think now that we've done that, we can certainly proceed ahead. We'll start off with a blank chart. Okay, new month, new start, second half of the year. So we'll have a look at Bitcoin. I think today's market stream, I don't really want to drag this out any longer than it has to be. I want to just keep it straight, sharp, to the point, and I will probably jump on stream again in 2 weeks' time as a continuation. But let's just start off on the weekly time frame. In fact, we can have a look at the monthly time frame again. When we look at the monthly chart, I think what's key for me, and something that I alluded to in the past, is generally we'll start off with the basics. So when I look at the Bitcoin chart on a monthly perspective here, let me just get my pen open. Thank you, Bantergirl, for the kind compliment with regards to the charity mentorship. Hopefully the best is yet to come over the next 2-3 weeks. So anybody who's looking up to sign up to the charity mentorship, please do not sign up right now because I will be ending the mentorship in the next 3 to 4 weeks, possibly at some point in August. But depending on how or what my availability is like, I may run an additional mentorship throughout the second half of the year as a continuation of the first mentorship, which is going to be covering slightly more advanced concepts when it comes to order flow trading and trading TradFi markets, CME futures, how to get connected, how to trade on those markets. So that's something that I may be looking to do, but it just depends on my own circumstances. But anyway, looking at the chart here on the monthly time frame, okay, wicks at the highs, wicks at the lows. These are key inflection points on the market, whichever way you look at it, okay? There's always been a substantial reaction from these points in the market. So what I'm just considering the fact or the possibility that, look, could there be a possibility or a scenario that we could break up higher? Yes, absolutely, right? You can't know for certain that we are going to reject from here. But again, the first thing that comes to my mind is the fact that majority of this price action has been range bound. And really, we need to see initiative price action above these highs, above 112, 113. On high volume, that isn't going to get absorbed by passive sellers, okay? So in the books, you will see, well, whether you see passive sells stacked in the books or not is irrelevant, okay? That's why heat maps are not always reliable, because a heat map is just essentially an advertisement of passive players who are looking to get their positions filled. But sometimes what you have to remember is that if you're a large player, you're not essentially going to advertise a really large order in the book, and so that other participants may start front running those orders, okay? And that's where the concept of iceberg orders comes into play. And you won't necessarily see that happen on a candlestick chart. You have to look at the DOM, you have to look at the footprints. You will see those passive orders, right, get into. These will get filled, and then the asks will get replenished. And then there's another $50 million worth of asks resting in the books. Meanwhile, you've got all this aggressive buying happening here, market buying, okay, whether it's a combination of shorts closing out their positions because they've been stopped, so therefore they become forced buyers, or whether it's new participants or, you know, late participants looking to trade the breakout, essentially just filling a large entity's asks here. And then the scenario that you then have to look for is that if we get acceptance back inside these set of highs where, for whatever reason, we can't seem to get an aggressive thrust higher on high volume, so you should see a spike in volume, and if you see a thrust through this level, then I would say there's a good possibility that we see a breakout trade in terms of continuation. But if you see a candle pushing up into this level here, let me just clean up the chart. If you see a candle pushing up into this level, okay, and the volume spike is fairly reasonable, it's fairly aggressive, and you're watching the tape, and you've seen orders flow into the books, but there's no continuation, that's a lot of effort for not much reward, okay? And therefore, it starts raising doubts. By no means will you understand during this phase whether we are going to see continuation or rejection, but you certainly can look for signs of absorption or exhaustion, okay? And then if you find acceptance back inside, well, all those traders are trapped in there, they'll put their positions, and then you get the reversion, potentially to, you know, somewhere wherever relevant sport is found again, okay? So that's just a concept of something that you've got to watch out for. And one thing that I don't like, again, is the fact that when I drop into the weekly chart here, you know, if you look at the price action here, just from a candle perspective on the highs, we've got this high here, okay? We've also got, in terms of weekly candle closes, resistance. Okay, so let's just go left to right, okay? Or right to left, whichever. Resistance, we never close inside, okay? Same again, and again, and again, and again, and again, okay? How many more times is it going to take before we can hopefully at some point trade through this level? Not only just trade through this, but on high volume, shallow pullback, and you see continuation high. Then I would be happy to go with the breakout long and look for that continuation, unless we see a real aggressive drive in momentum and tape, and I'm watching the order flow, and I think, right, it's time to get on board with this trade, because my invalidation is clear. My invalidation is that if this starts pushing away, then I know if we get back inside here, it's probably a fake break. They're getting trapped, and I have to cut my position and reverse and look for the short on the other side. Okay, that's kind of the high level concepts of how I would personally be looking to trade those types of plays. So looking at this, you can see immediately from a weekly time frame where key resistance is. It is at that 109k level, and in through here, it's fairly congested. It's fairly choppy. The sentiment has been very, very bullish. Every time we trade into 110s, we find rejection, and then the sentiment flips a week later once we're trading back down into 101s and 98s and 105s. It's doom and gloom. So you've got to really put the sentiment aside and just focus on price action and what price is telling you. So when I look at this level here, we've got this on the daily time frame. We have this daily supply zone or daily breaker or daily resistance, whichever terminology you like to use. It's all the same to me. But ultimately, when I look at price here, you can see along this level again, we didn't find any acceptance previously, which has become a level of resistance. We traded, okay, above this high here on a daily premise, okay? When you look at this green line on this daily chart, we had one candle close above it, and we traded back through that level again. And every time thereafter has been a rejection. There's been no clear signs of acceptance above here. So again, for me, this now, using this high here, is going to act as an important level to have mapped out on the chart. Now, taking into consideration recency, we can also just use these highs here. Okay, so somewhere in this zone is, if I see a rejection of where price tries to push up, but it gets rejected, that for me warrants caution that we could see a rotation back down. How far down, I do not know. Okay, I'm not in this game to predict. I'm here to react to what the chart is telling me, what the order flow is telling me, and where I can look to step in. But the main purpose of the chart is a compass for me. Okay, it helps me identify levels that I'm looking to trade, but it doesn't show me where I want to execute. That's where the lower time frame order flow dynamics, or 5-minute time frames, 1-minute time frames, maybe you want to look at the DOM, maybe you want to look at the tape, maybe you want to look at heat maps, whatever it is, whatever your execution method is, it helps you refine exactly the level that you want to do business at. Okay, so that's kind of my thoughts here on the higher time frame. When I look at this structure here, we are spending a considerable amount of time, and there has been evidently a level of spot selling every time we approach these highs, whilst futures are trying to bid up into this level, but we're not really seeing any continuation. So if it looks like a range and it trades like a range, then it probably is going to be range bound. Okay? Because markets generally range 70 to 80% of the time and trend 10, 20, 25% of the time. So when you zoom out and you look at this chart here, even when you go far as back as this here, you look at the large phases of range-bound price action. This is a range, okay? This is whether you want to accept that this is a range or whether the lower bound is a range, you still have a range and you have the upper bound of the range, okay? You can see from 15, 16 to 30K, we spent the best part of May 22 all the way through to October 2023. That's almost 15, 16, 17 months. Then you have a period of markup, okay? Very fast. From October through to March, okay? The start of March. So the end of October, early November, December, January, February, March, you have this breakup. We get sideways price action from March all the way through to November, another 6 months. And then you get this thin leg up from late November all the way through to December, just 4, 5, 6 weeks of price action before we found a top, which is capping price. There's your range, okay? So you can see markets are generally range bound for large time periods in comparison to trending markets. So the question you've got to ask yourself is, given where the market is right now, again, I don't have the answer to this, but is the probability from this current point in the market, are we likely to see aggressive continuation higher, or are we likely to see some range-bound price action still within here? Now, for me, the answer is very simple. When I look at the market from an auction theory perspective, okay, when you look at this as a larger, higher time frame market structure, this to me is all range-bound price action. Okay. Now this is subjective to the type of trader that you are. Okay, whether you're a scalper, whether you're a day trader, whether you're intra-week or a swing trader, a positional trader. Okay, so the context of time is really subjective to each and every one of you and the time frames that you trade. Now, I consider myself a fairly versatile trader. I don't really scalp at all, but I do intraday trade, okay? Now, there are periods when I intraday trade, and that's when the volatility is fairly low. The average true range is fairly low. But when I become a swing trader or a positional trader, it is essentially at these key inflection points, swing fails in the market, okay? They are, for me, some of the best levels that I can hold onto a position or hedge at these highs in the event that we get a rotation back down into this mid-level here. Okay, that's essentially how I'm looking to play markets. So at these high time frame inflection points in the market, okay, these are the levels where I'm looking for a reversion back into the mean. If I'm looking to long, I'm looking for a reversion back into the mean, and so forth. They're my positional trades. Now at the highs, one thing that I've done in terms of trading is change my approach, right? The reason why I short nowadays is not because I'm trying to make money and that's it. I'm trying to cash out. The reason I short something like Bitcoin from a trading perspective is because the profits that I make from Bitcoin, from shorting Bitcoin, actually go back into buying Bitcoin at a level that I perceive to be value. Okay, so if I think Bitcoin's coming into value and I'm managing to ride the trade down on the short side, I'm going to close out that trade for a profit and buy some Bitcoin with it. That's just my way of stacking Bitcoin. And equally from the hedge perspective, it just offsets any downside risk. Now, I've said it before in previous streams, Exo, well, why won't you sell your spot Bitcoin? Because every time I'm buying and selling spot Bitcoin, I'm essentially executing a taxation clause, whereas just by holding my spot Bitcoin and it goes higher, then great. I don't have to really worry about having to buy back into my Bitcoin. I'd much rather send it into a cold wallet, cold storage, and just leave it there. Okay, so that's kind of my approach, and why, you know, people say to me, why are you shorting Bitcoin at the highs? Why are you standing in front of a steamroller? It's very simple, because if this rejects, then I'm locking in the gains that I've made, and I'm looking to close that short and buy it back either at value or even lower down, looking for much, much higher prices over the next 5 to 10 years. That's just my personal approach. Okay. So when you look at the markets here, I think for me personally, when I look at this whole entire range, could we get a breakout? You absolutely have to be open to the possibility of this trading higher. The only thing that I would not want to see if I was net long, currently I'm delta neutral, but if I was net long, one thing I would not want to see is Bitcoin trading above these highs, okay, for a period of time, say 115, 120 or 117, and there's no momentum, we get a retest, and it breaks down again. Then I think we're in for a deeper correction, okay? That's something that I would not like to see. However, if in the scenario where over the next 6 to 8 to 10 weeks, we generally know seasonality-wise that Q3, you know, can be very quiet. It's very range-bound price action. I can't really recall the last time that Bitcoin broke out aggressively in Q3, printing new highs. It's generally been Q4 where we see that aggression coming into the market. And that's from October, November, possibly December, generally speaking. So when I look at the market here and I think, okay, well, look, I've got a clearly defined mid-level here, okay? We can see where price came into previously. Tested the mid, trading back towards the range highs, okay? So generally what I try to do is map out this as a zonal area. Okay, and I generally do the same again with the lower bounds of the range. This is all I'm looking to do in terms of business-wise. Now, by no means am I going to say to you guys, and I think this is really, I'll give an example of something that isn't really objective. When you see somebody pointing out an arrow that Bitcoin is going to come into 87, that doesn't tell me anything, okay? What am I supposed to do with that information? Nothing. There's nothing I can do with it. But objectively, what I can say is that, look, if Bitcoin does start rejecting from here, even if we get really close up on the lower time frames, and we see price push up into this level, but it fails to take out this high, it takes out this level here, there's a lot of aggressive market buying that gets absorbed, and there's an unwind of positions, then we have an issue. Then I think we get a rotation, take out these lows, and if it goes under 105s, then I think you can't really rule out the possibility that we could see a retest of 98 potentially into this down candle, okay, demand zone, where we saw initiative buyers. Now, what's initiative buyers? What's auction market theory? When you think about auction market theory, and again, a balanced range is just price action, okay, where price is trading in a range. This is a balanced environment. You have responsive price action, which is where price trades the extremes, but it gets rejected and reverts back into the mean. Now, generally what you also have is kind of if you think of a profile, okay, bell curve distribution shape, okay, with the point of control generally at the center. Markets range, okay, in terms of price generally stays within value for 68% of the time, where you get the extremes at these left and right tails, which when you find rejection, price reverse back into the mean. And that's essentially what's happening. If you think about a bell curve shape with a point of control here, if you see a rejection at the range lows, it's likely you're going to see a move back into the mid. Same with the highs. This is classic responsive price action. Okay, that's acceptance within this balanced environment. But initiation or initiative price action is when you see buyers stepping into the market, pushing the market higher, and you get a thin move, okay? There's no real pullbacks, and it's a very, very fast move higher until the markets find a level of balanced environment. Whether that's consolidation, whether that's distribution, it remains to be seen. But this is your initiative buying, okay? That's what you want to see on a breakout. You don't really want to see price pushing up and then finding responsive price attributes or conditions where price rejects and trades back into the mean. So when I look at this, that's what I'm thinking. It's like, look, we're at the extremes of this high time frame range. We can't seem to find any breakouts. I wouldn't rule out the possibility that we get a deeper retrace potentially back into this level again, okay? That's all I'm going to say. Just watch out for this downside, but with that, it presents an opportunity that if we do trade into 97s, 96, 95s, and we find acceptance back inside this range, then everything that I've just covered, you want to see this to not get accepted, okay, outside of the range. You want to see price showing a willingness to return back to what the market deems to be value, okay, back into that value area. All right, and it's the same on the upside. If we get a push up that gets rejected, then I think we probably will see back into 105s, potentially to the other side of the range. Okay, that's all there really is to it. If I really want to keep it simple from these higher time frames, I'm not really going to talk about the lower time frames and how I've been intraday trading. I don't really think there's much to offer. I think the bigger trades are these key inflection points, and that's certainly where I really look to load up in terms of position sizing, swing trading. They are the key inflection points that I like to trade in the market. Any questions? Anybody with any questions? Let me know in the chat. Is that clear so far? Okay, let's have a look at the fixed volume profile tool, which is something that I think is a fantastic tool. When you look at where the market was previously in balance, and this is actually very important to pay attention to this. When you are using the fixed range volume profile tool. You don't just mark it out on an area of balance, okay? You really want to be anchoring this tool from where you have a break of balance, okay? This is a balanced environment. Look at the concept that we just covered of responsive price action at the highs and the lows, okay? At the edges of the edges of the range, okay? That's where you're going to see a rejection. These are some of your best trading setups: range lows, range highs, okay? Reversion back into what is considered to be value. But where you want to really anchor the fixed volume profile tool is when you get a break above balance and acceptance, followed by an imbalance and continuation until the market finds a balanced range-bound environment again. So if you take the fixed volume profile tool, essentially I want to be marking it from this impulse here. This was the impulse out of the range, and this is where price is currently trading. So when we do that, okay, if you just recall what I said about the bell curve here in terms of, okay, and 68% of the first standard deviation is deemed to be the value area, okay, with your point of control somewhere in here. This is where price generally spends the majority of the time. So when you draw it sideways, that's a shit example there. You can think of that as a range. And 68% of the time, price is likely to find itself trading between the first standard deviation of this. This is where there's an agreeable acceptance of trading between buyers and sellers, deemed to be at fair value, where at the extremities, you're either going to get late longs or aggressive shorts piling in, along with forced sellers and forced market buyers. So anybody who's shorting this here is probably going to get stopped out. They become a forced buyer. Anybody who's, when you see price action like this, so for example, when you see price, here's an SR demand zone, right? Okay. When you see price, I don't know, there's some structure here, right? Price rallies higher, price comes lower, it just stops short. Anybody who starts long in this is probably going to put their stop under here. Price rallies, it comes back down. Now, if you've got your stop under here, what are you doing? You become a forced seller. Therefore, price is dropping faster into this level. Now, whether this level holds really depends upon the fact that, are there any participants passively absorbing all this aggressive market selling? I'm not saying shorting, I'm saying market selling. Whether that's fresh shorts opening, whether that's longs closing, the only way you're going to gauge that is through potentially looking at something like open interest, looking at the delta, and looking at the CVD. So that's something that you need to pay attention to, because if these passive orders get pulled, well, you've got thin air. There's absolutely nothing to stop the market going lower down, okay, until somebody or some aggressive, well, some large entities, let's say, because it's not me and you who stops the market from falling. We're just small players in the grand scheme of things. These are your corporate commercial players who will decide that, right, this is value for us. We want to step in. We will absorb this aggressive sell. And this is a great opportunity for us to fill our inventory, okay? And it's the same on the opposite side. It's not any different when you flip it and you're looking for shorts at resistance. How often do you see price, when price comes into resistance, you think, oh, this is a good level to short. You got your stop up over here, gives you a shallow pullback, and it just blasts through on high volume. Well, these shorts are now forced buyers. Number one, that's cascading price higher. Then you've got breakout traders piling in. This is why you get those fast moves. When price breaks out of a range, it shouldn't fuck around, okay? If it does start fucking around, then you know you've got a problem. But when it really takes off, it's a combination of shorts being forced to close out their position, short liquidations happening in the book, the spreads get blown apart. What happens when the spreads get blown apart? Well, there's a lack of liquidity in the books. And when you have a lack of liquidity, what happens to the market? It can go from A to B very, very quickly. And that's why you have these very thin inefficiencies, or what some people call, oh, look, there's a fair value gap or a single print or an imbalance. That's essentially what you're looking at. okay, on these moves here. That's what price does, okay? It doesn't fuck around when it breaks out. So if we are going to go higher, then the way it's going to happen is essentially shorts or hedges being forced to close and breakout longs piling in, and we shouldn't fuck around, because if we do, that's my point. We're probably going to see a reversion back into the mean. And if you understand how markets work, generally they stay range bound longer than we can potentially or possibly anticipate. All right. So I'm just trying to give you an understanding of when we think about market context, when we think about breakout trading, when we think about truly what drives markets higher and the dynamics of how markets work. By no means what I've just said is exhaustive, but it should help you understand the underlying dynamics of how markets function under the hood. It's not because, oh, my SR line is here, look, price rejected from there. Your line had fuck all to do with it. It's the fact that some large players here decided that they want to offload their inventory. Not because you had your line here and rejected, okay? Because if they pulled their passive sells, price can easily trade through there, okay? And that's why on news-driven environments, on news-driven events, if you have a shitload of support here and a fuck ton of passive bids, but for whatever reason, Trump comes out and decides to announce 200% tariffs tomorrow on China, well, what do you think is going to happen when it comes into this level? It's no longer going to hold. It's just going to go straight through it until the market deems that this is now actually value in terms of what they perceive to be value, okay? Until passive participants decide to step in and buy what they believe is oversold relative to how they value Bitcoin, all right? So back to my point, when you look at this fixed volume profile, this is that initiative drive, this is that imbalance, this is that thin move, okay? Because if you look at the volume profile here, it's relatively thin. This is not something that you want to short when you have these initiative moves in these imbalances until you find a level of value being accepted where price is now finding acceptance at this range bound environment. And when you look at this here, this is what's important to me. If this is value here, then where's the value area high? The value area high is acting as a level of resistance. You can see that every time, if you just give me 1 second, if you look at this, this is slightly more clear now, okay? When we talk about using the fixed range volume profile tool, where is price rejecting from? Where is the value area high? See, where's the point of control? It's down at 96.95s, okay? Where's the value area low? This is where price has spent majority of the time. And you can see the responsive price action at these highs. So my concern here is that if we do get a pushback above this 109.9, 110 level, we need to see acceptance of price above these levels to give it the possibility that we will see significantly higher. But if we get a rejection, or if we see price trading above here and then back inside, I think there's a really good chance that we could trade back into 96K. And that really lines up with this demand zone. And it also lines up very confluently with the high time frame range high, okay? And the high time frame range low. When you look at the mid of this, this is what I'm looking at essentially, okay? There's our mid level. So if we do happen to trade back into the point of control and find acceptance back above it, I'm a buyer. And I think we trade back into the range highs. If we find rejection, then I've got to be open to the possibility that we could trade back into 82s, all right? That's just, we're a long way from that just yet, but that's kind of how I view markets, okay, from the higher time frame perspective. Has that helped you guys understand how I use the fixed range volume profile tool? And again, another way of using it, that was on the macro time frame. If I wish to use it on the lower time frames, again, how can I identify the anchor point on using a fixed volume profile tool? Well, if you look at what you have to think about again is how markets auction. Did or did not the market auction lower down from this point here? And then at which point did the market auction higher? it was this point here. So if I'm looking to take this fixed volume profile range in terms of recency, I want to map out the initiative move up through to where the current price is. And again, when you look at where that is, it's from this zone here on the 4 hour. This was where the market auctioned down, the market auctioned back up. What do we find? We find ourselves trading in the value area, okay? If you look at what's been capping price in terms of support, it is the point of control. We have resistance at 109s. I am not really willing to intra-week trade this. I'm willing to day trade this. But in terms of intra-week, I need to see either price push above here into 109s, clean up these poor highs, which I will show you on the market profile chart, get back inside, and I think we then oscillate back towards a value area low. Because price often spends a significant amount of time gravitating between value area high, value area low, until we see acceptance, okay? This was, again, responsive price action, where price trades into the value area low. We see price coming into this extreme, into this demand zone. What does price do? Buy a step in, push the market to the value area high, okay? Rotations between value area low and value area high are some of the best trading setups that you can play in a range-bound market environment, okay? So overall, I think if I had to guess, and again, this is just a very loosely held opinion right now, I think I would like, from a trading point of view, when I look at this on the 4 hour chart, now I'm just delving into the trading setup aspects. We have this, all right, first of all, we've got this daily supply zone that we've marked out. Okay, this is what's essentially capping price to the upside here. But really, when I go into the 4 hour chart, I want to refine a possible area that if I see price trade into this zone, I want to be alert as to whether I'm going to long the breakout or whether I'm going to short. But for me to find a long scenario, I've got to see acceptance above this level with a spike in volume, and I've got to watch the tape. If I see market orders flooding in, lifting the offers, it's time to go. And if I see aggressive selling coming into the market, but it's been absorbed by passive sellers and they can't push price lower down, well, guess what? Anybody who's shorting this and they are now offside, that's going to fuel the market even higher. That's generally how you get trend continuation, and that's not something you want to fade. So it's essentially, if price pushes up into here, rejects, cleans up these highs, that for me is a higher probability setup back into this level here. Okay, that's it. From A to B, range high to range low. Okay, if we consider this to be our support point, this to be our swing point, anything in between is for low time frame rotational trading. Anything at the extremes is what we're interested in. Okay, that's all I'm looking to do. The other point that I want to make here is we've marked out this 4 hour supply zone up at the highs. If we trade that and get a reaction, I'll be very interested in looking to become a seller. If we find acceptance, I'm looking to become a buyer. Okay, from a trading perspective, I'm not talking from a spot. I already have got a spot. If the market pushes higher, I will close my hedge for a very slight loss, giving the market a chance to go even higher. I profit on the move higher. But really what stands out for me are these highs here. Is the market likely to drop without taking these highs, or is the market likely to push up? And again, I think it's clear for me, if we trade in here and we can't really push up or even into this supply zone, then I'm going to take that on personally, okay? That's all there is. I'm not bearish, I'm not bullish, I'm just looking to trade the range on my trading account, okay? As an investor, Bitcoin's going higher, fine. Now, when we move over to the market profile chart, if we just look at the structure of price, just give me 1 second. Let's look at the TPOs, the market profile. I know some of you are not familiar with this concept, but it's something I'm going, well, I will be covering in the mentorship. But essentially, wrong chart. 1 second, guys. There we go. Okay. So when I look at this, let me just make sure that I've reset all my mergers and splits. Okay. When you look at the market here, and you can see at the all-time highs, we have these poor lows just short of 112. Okay. We haven't really traded that level again. And I think we also have this area here, which we haven't really taken out, this 110.8. We've got a set of poor lows. Now, what's a set of poor lows? It's essentially, sorry, poor highs, not lows. Poor highs and poor lows are basically unfinished auctions, okay? It's where the market never finished an auction. Essentially, really what you want to be seeing is a tail such as this, okay? That completes the auction. Here's another example. Here's another example, okay? You have a series of single TPOs that confirm that it's a completed auction. But here you can see we've got an unfinished auction, which therefore creates a set of poor highs or poor lows. And generally what the market does is tend to gravitate towards those levels, cleans up the poor highs and lows, and then goes the other way in range-bound environments, okay? Unless we are in a trending environment in the market. Now, that's one level that I'm watching very carefully, okay? And if you look at where price currently is, it's this level here, okay? That one there. We also have another set of poor highs at 105s. We also have a set of poor lows at 107.2. So even from a TPO perspective, if I'm looking to intra-week trade this, I know immediately exactly the levels that I'm interested in. And that is going to be that we take out this, clean these up, and if we can push back inside, we could trade the other side and take these out. If we get a move whereby we trade higher from this point onwards, okay, clean up these poor highs, and it gets back inside here, okay, and there's a rejection, that if this is our potential composite, to see trend continuation either to the highs or lows, you want to see price break out of this composite. And I'll show you what a composite is. A composite is essentially an overlapping of value areas. Now, if you remember the example that I gave you with the bell curve distribution example, okay, where price generally finds value, it's 68%, one standard deviation of the distribution, okay? Now, if you have value areas which overlap, then you can merge those profiles. Now, this is subjective. Some people say 70 to 80%, others say 50%. I personally don't really have a guideline. I think what makes more sense to me is that when I look at price and I see price in a range-bound environment, I'll just merge those profiles for as long as there's a good level of 2 or 3 daily TPOs that overlap in value. Okay? Now, I'm not using this because this was the impulse up. But if you look at this value area high and this value area low, does this or does this not essentially form what appears to be what's capping price? And then when you look at, because this was the impulse from 105s to 109s, where's the value area low? It's there. So where is price contained? From a market profile perspective, where is price trading for the last 1, 2, 3, 4, 5, 6, 7 days with this impulse up? It's contained within this value area. So my take on this is not the fact that whether the value area, you go from left to right. Okay, my take is not essentially the fact that, oh, look, well, this value area doesn't overlap this. My slight nuance to this, and it's not essentially textbook, I will just end up merging these because it's still contained with this entirety of this significant imbalance, double distribution day or treble distribution, because you got a period of price acceptance here, price moves high, you've got a bunch of single prints, price spends a bit of time and then pushes high and closes up in this third distribution, okay? And so I'm going to merge the profiles to create a composite. Merge this with the previous profile. Merge this with the previous profile and so forth. It's very slow, as you can see on TradingView. And again. Yeah, I know you can make a weekly profiles, Grant. I'll come to that in the future streams. It's what I essentially use on Excel charts. And so now I've merged those profiles. And once I've merged those profiles, I want to see where the value area low and the value area highs are for those. And they're coming in at this level here. 107.6 to 109.3. So that's forming more or less my composite. Now, if I want to see continuation of price going higher, if we get a breakout above, pullback and retest, continuation, then I think we're going for 112s, okay? Or clean up these highs here. If I see price push up, reject, come back inside this value area, composite, 7-day comp, okay? Then I think the probability is that we trade the lows and we trade even lower down, possibly into these thin prints over here. If you understand what fair value gaps are and what single prints are, then I think we could trade back into that 105.9, 105.8 level. But for that to happen, I would need to see price find acceptance outside of this balanced environment, okay? So we find acceptance, okay, not responsive price action that causes it to trade, but initiative price action that sellers are in control. We get a fast move down into this inefficiency here. Now, when you look at the price chart from a price action perspective, what does that mean? If you go to the 1 hour chart, that 105 level is likely to be a level of inefficiency over here, okay? Somewhere in here, which is close enough to a key level of support, all right? Now, looking at this current range, we know that we have a set of poor highs here. We've got a set of poor highs from this level here. And this down here is a set of poor lows. So it's just a matter of which level are you looking to trade and why, and understanding the context, all right? If I just do reset all merge and split, clean up all the scribbles on the chart. Again, when you look at this profile here, again, it depends what you consider or what constitutes a single print. Now, the one thing, like, you probably see ICT fanboys talking about fair value gaps. It's just an inefficiency, that's all it is. But with a TPO chart, it really helps you refine where those inefficiencies are, okay? And it's right here. You can see you've got 3 single TPOs, a very thin level of price. Now, these are very interesting levels because they either act as support or resistance. So if price trades into this zone, you're essentially looking for price to give you a reaction from this level here, okay? Acting as a level of support, okay? You want to see a reaction. It's essentially, when price is trading low and it pushes back up into a single print, you're generally looking for a rejection or a reaction from that level, okay? So for me, that's a level of interest, that 105.9 level as well, okay? From an intraday or an intra-week perspective. So right now, when I look at the charts, this is what I'm looking to trade. If this is all our value area and we trade the extreme of the value area high, okay, and we've got value area low and we get rejection, then I want to short. But what confirms it is once we get acceptance 2 30-minute candle closes in the value area high, then I think there's a really good chance that we trade towards the other side of that value area, okay? And then we'll take it from there. And if we find acceptance below it, then I now can hold it down into 105 or 105.9, 106s, okay? And then we'll take it from there. So that's how you can look at something like market profile and then write down your levels on a piece of paper or your daily trade sheet or your weekly trade sheet and your plans, and then go to a price action chart and then refine those levels on the candlesticks, okay? All right. That's all there is really for Bitcoin in this instance. But when I do look at this, I mean, the question I'm asking myself is, do we trade lower down or do we push up higher and take out these highs, or do we take out these lows? I don't have a clear view in the market. I really don't. I've just been intraday trading, and I think when I look at this, you've got this candle high here, you've got these lows here. It's whatever gives really, okay? Even when you take this auction up into value, look at where we're currently rejecting. We're rejecting from the point of control. So are we now likely to gravitate towards the lows? And if we gravitate towards the lows and find acceptance below here, then does that mean we trade into that 105.9 level over here, confluent with this 4-hour demand zone, okay? That's something that you want to see hold if you're looking for longs back up, or if we just trade through that, then I think we're in for a deeper correction into 102s, all right? So a lot to consider, a lot to, contemplate, but like I said, it's not the ideal environment if you're looking to swing trade. This is more suited towards intraday trading, and that's all there really is to it. All right, let's move on to Ethereum. Before I do, let me just scroll through the chat and see what the questions are. Just looking through some of the questions here. Yeah, Daytona, I'll cover higher time frame composites in a few weeks' time. Do you use it? Yeah, I used it. Well, I don't use default settings. I use 68%. Let me just confirm that actually, because I always reset my tools prior to streaming. But yeah, I generally use 68%. It doesn't really matter too much, but I just, for whatever reason, I prefer to use 68. Yeah, TPO is great for intra-day targets, Grant. How's your trading coming on? Have you started using TPO more often for your trading yourself? Would I share my ideas on Forex? Yeah, I'm going to get around to Forex again in September. I've just taken a break from trading Forex. I never trade Forex in summer markets, if I'm really honest with you. But I will be looking to trade Bitcoin, Bitcoin, NASDAQ, gold. They're the three majors that I'd like to trade in Q3, September, October, November, December. Let's move on to Ethereum. I think when I look at ETH, very interesting chart. Again, one of the levels that I wanted was, this was clear absorption followed by rejection and delta unwind all the way, literally where I bought back into my ETH again. Okay, very, very happy with that trade. Talked about it, covered this on the timeline, covered it in previous streams, that if Ethereum trades into 2100s, I'm absolutely buying, because if you look at this from a price action perspective, it's macro range high, macro range low. We've got the macro mid range. We've rejected from where? The macro mid range, pretty much where the timeline was very, very bullish. Where did we pull back into? Into the range quarter. What was the range quarter? It was a previous accumulation range, okay, that Ethereum had established. Really, really good retest of that level, okay? And then when you look at the the fixed range volume profile, if this is our balanced environment here, in fact, let me just remove this. If this is our daily chart and we have almost 2 weeks of price action here, okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 2 weeks of price action. What's the impulse that led the market higher? And so therefore, it's this here, right? And so therefore, what was the breakout of balance? It was this. I take my fixed range volume profile, anchor it all the way across to where price currently is. Okay, so every day you have to come in and readjust this indicator. Where's price? It's back in fair value. It's back into resistance. It's at the value area highs again. Okay? So now the question is, do we find acceptance above here, or are we going to find resistance here? This was the time to buy. This here was the time to sell. Swing fail these highs. Rejection, short, stop at the highs. Trades back into the value area high to the side of the demand zone, okay? Buy this, sell this. Nothing to do here. We're into resistance. Whether we push up and reject and gravitate back towards a value area low, or whether Bitcoin trades 112s, okay, or we make another push at the highs and reject, and we remain range bound in this entire zone, okay? One thing that I alluded to over the last 2 streams in June and in May, I specifically stated that I don't think people are prepared for exactly how long Ethereum can remain range bound within this zone. If you look at price action here from A to B, this was early August all the way through to November. 4 months of price action where price oscillated from range low to range high. Range low, almost a range high, okay? And so when you mark out a fixed range volume profile here, this was the impulse down, okay? Look how long price spent in terms of the value area. You want to be looking for opportunities at the value area lows or into this demand zone. Look how thin price is here at these extremes, okay? 4 months of price action, that was range bound. So when we look at the present day price action, how much time have we spent from this impulsive move up $2 months. It's July. Maybe we spend August and September in here before we get a Q4 rally in October, November, December. So the question is, if price does trade the value area low and lower down into support, as long as this holds, I'm a buyer. And if price comes up into here and rejects, I'm a seller, okay? Until I can trade the next range here. That's all I'm looking to do. I'm not going to bull post into resistance. I'm not going to bear post into support. I'm going to be aggressively buying this, and I'll be looking to be cautious at resistance in case we get rejection and the move down, because these are your high time frame inflection points in the market. That's all there is to it. And I don't care what the sentiment is. If people are getting bullish, fine. It makes no difference to my trading decisions. Okay, so all I'm saying is that don't let your emotions ebb and flow, okay? Just make very good objective decisions. Be prepared for lower prices, such that if price trades back into support over the next 2 months, in August, then you want to be looking to buy this as potentially something that's oversold from what is fair value, unless we find acceptance and break below this support zone, okay? So this is what I would perceive to be a very good buying opportunity, okay? Until we break down, then I would have to say, right, I'm now even better. I'm happy to take a small loss. I'm going to get to buy ETH at a greater discount in the view that over the next 12, 18, 24 months, that Ethereum could potentially be printing a macro bottom. Now, this is the worst case scenario, but again, I'm just trying to tell you the mindset as to how I approach markets. If this is the adverse scenario, this is fucking fantastic as a buyer. This is brilliant, right? Unless Ethereum goes to shit for whatever reason, but this down here is a fantastic buying opportunity to trade back into the high time frame mid-level again. Because again, this for me is all one big range, okay? A range within the bigger range. When you treat it from level to level, I practically don't care what the fuck people say about level to level trading. Been doing this for 9.5 years. I do this as a living now, okay? And I back myself to do very well. So that's all there is on Ethereum. When I look at something like Hype, I struggle to really understand why I would want to buy Hype as a positional trade at $40 and say, look guys, I think Hype's going to go to $80 in the next 3 months. It could do, fine. But from a positional perspective, I'm not sure I want to do that. I would much rather trade this, and that's trading it to the range lows, or looking for opportunities to buy at the range lows, okay, or even fill in this inefficiency to the left here, okay, because we had, look at the impulse. This was the impulse out of here, okay, this expansion. So in here, from where these wicks are down to this level here is your ICT fanboy fair value gap, okay? And so when you look at this from a range bound perspective, if you have this as the range highs, this as the immediate range lows, and we come in and take out these lows here, possibly into this level here, and we find acceptance, that for me is a trade back up into 36, from 28 back up into 36. From a spot perspective, I might even buy some as well, okay, for a longer term play. Now, what gives me a level of concern is when I look at the trend scanner, what have I taught over many, many months and many years? That look at the trajectory of the moving averages. Okay, this is the 1225 daily EMA. You do not want to fade this because look at the trajectory of the moving averages. Now look at what's happening. We are forming a balanced environment, okay? Buyers and sellers are accepting these prices as fair value here. Now, at some point, one side or the other is going to dictate where anybody who's buying up here is realizing that they're going to take a loss and peak their positions. Anybody who's profited on the way up may look at this and think, right, it's time to take profits on my trade. And therefore, they're looking for lower buying opportunities. And then your buy side demand disappears because now people are waiting for what they believe to be fair value or perceived to be value of buying Hype into a level of demand, wanting to see price hold these levels. Buyers need to be stepping in, and you can buy at a discounted price. Okay. Kenneth, good question. At what time frame do you determine acceptance below or above a level? It really depends what time frame you're trading upon, what the context of your trade is. Are you intraday trading? Are you scalping? Are you intra-week trading? Are you swing trading? Are you positional trading? So you see how ambiguous the question becomes, because really you want to be asking yourself is, what time frame am I trading? And what am I looking to achieve behind this trade setup? What's the expectancy behind this trade setup? They're the questions that you want to be asking yourself. Okay? Just give me 1 second. Any final questions? Because I'm going to wrap up in the next few minutes. But if there's any final questions, please do let me know. This to me does look like distribution, if I'm honest with you, but I could be wrong, okay? But it does feel somewhat distributive here. That's my range. If I get a rejection from there, I'm back inside. And look at the wicks, okay? Look at the wicks. If this wicks off into here and rejects, that's another selling opportunity. And I think we trade the mid of this macro range. Mid-range, range highs, range lows. These are good swinging opportunities here, okay? All right, one final pointer. Let me just have a look at the questions in the chat. Yeah, the mentorship on the okay. So basically, I've had a thought about the mentorship, and again, I appreciate so many of you have full-time jobs, you've got children, you've got commitments, and you can't absorb all the information. I will ensure that the information is accessible for the foreseeable future, okay? I'm not going to pull the plug in August. It will be available for those of you who are part of the mentorship, okay? After the mentorship ends. The mentorship probably ends in the first or second week of August. I'm taking a break. I want to focus on my trading in Q4. And then maybe we'll probably look to do something towards the end of the year again in terms of regular videos. As you know, I've never run any paid groups. I'm not looking to run a paid service. If ever I do something, it's always going to be because, you know, I want to give back to the community, but it's probably going to be under some charity related ref link, all right? If people want it. If they don't, then fine, not a problem. Makes no difference to me. I want to leave you, for those of you who watch the mentorship, you already know this slide, but these are the questions you want to be asking yourself. If you can write these down before you take a trade, answer these questions. What is the market trying to do? Is it succeeding or failing? Where is value forming? Who's in control, buyers or sellers? Are we in a balanced or imbalanced environment? And how is value migrating? Okay? Whether you apply that to hype, whether you apply that to Solana, Ethereum, Bitcoin, NASDAQ, really the key question is what time frame are you trading upon? Okay? Because depending on the time frame, you will all have different answers. If you're scalping, if you're day trading, if you're swing trading, it's subjective to the context of time and price, okay? And then the volume aspects. What does my XO chart setup look like? I've been working on this actually quite a fair bit. This is what it probably looks like. There was a really, really good setup today. I'll probably cover it. I'll save it for another time. But this is, because I'm on a small screen here, this is the DOM on the right-hand side. So basically, I'll just quickly explain what this is. And I think this is something that I would like to touch upon over the coming weeks or months, okay? So I really want to focus more on educational content in terms of order flow. I've always held back. I've always talked about price action. I've never really commented too much about order flow, simply because of the fact that it just goes above people's head. When you look at this, you're just going to think, what the fuck is this that I'm looking at? So I generally try to just keep it native to what I believe is very important, which is understand your price action concepts first before you start looking at this other things of your trading, okay? And so something like this is essentially what I use on a day-to-day basis, but I only use this on trading an asset like Bitcoin. I don't use it for trading altcoins or futures or whatever it is, okay? So that's the DOM. Here you've got the price. Here you've got your volume profile, okay? So we talked about volume profiles. If I just increase this to 400 ticks, and you can see, okay, there's a value area low, there's our value area high, there's your excess on one side, there's your excess on the other side. If you look at this from a profile perspective, then what shape are we making here? We are making a P-shaped profile. And if price closes, okay, if this is the profile for the end of the day, and we find acceptance in here, then what does that tell us? That tells us that prices, the market tried to sell off, okay? Anybody who was long has been stopped out, but buyers managed to push price higher and close back inside this P-shaped distribution, which is generally deemed to be positive for higher prices, okay? For as long as we can start shifting value higher until we get, you know, an imbalance, and then we'll probably find a level of bracketed environment again. So that's something to watch out for over the coming day or two, to see if we find acceptance above this 109 level, all right? That's something fairly trivial, fairly basic knowledge, but these are some of the things that I look at on the DOM, okay? Depth of market, it's real-time order flow, looking at transactional data. It's about as close as you get, it's about as close as you can get to the action, okay? And then obviously I've got my this is my time-based chart, okay? It's using a level of delta, using just normal candles, but looking at the buy to sell ratio, okay, within each candle here. So here you can see the delta between buyers and sellers is 107, or well, it's forever changing, $233,000 worth of contracts, okay? And again, I can change the text type to bid ask, okay? And I can change the candle type to bid ask. So this tells me that in terms of buying at this level, $552,000 worth of contracts bought here, and 2 million of sales came in at this level here, okay? And again, these are some of the basic concepts that Magus has covered. I think C2M has covered, and it's something that I'll be talking about over the coming months, probably from August, September onwards, all right? I'm probably not going to cover it just yet, but this is something that you can look forward to if you want more of this type of educational content over the coming weeks. All right, guys, I think that's going to be it for today. Thank you very much for tuning into the stream. And final reminder, as always, key questions that you want to be asking yourself before you take a trade, when you're thinking about a trade setup and the trade structure, truly ask yourself these questions. And then if you don't know how to answer these questions, then make it your task to figure out what is it that I need to do to understand this, and this, okay? Because if you're unable to answer these questions, then work on it, okay? That's what I would say. All the best, have a great week, and I will certainly catch you on the next stream, which I think will probably be in August, all right? God bless, take care. Thank you very much. Bye-bye.